So let's get to where we are. Now, of course, well, what do we put in it? What do we put in it? Everything isn't NVIDIA. Okay, when in January 2023, this popped up on our approved list, it wasn't because our approved list of value, growth, income, new AI is going to be a big thing. It's because the valuation of the company for the earnings it was producing, the profits it was producing were low, and it popped up as a green. And then the other factors popped up as greens. It was as a result of that it ended up in the portfolio. Did we know what it did? No. I still thought it was making graphics cards for mining crypto. It wasn't at that, well, it still is, but it was really through AI. That only came out, I think by then you knew it was AI. It just popped up on the list. Should I, in hindsight, have bought this and nothing else? Yeah, but I didn't know it was doing all of this. The point is, the computer has an opinion, not me. The computer has an opinion. The computer comes up through the filters of undervaluation. Now, if you think undervalued companies are bad, then you shouldn't actually be allowed near sharp objects. If you think companies which are growing are bad, then you shouldn't be allowed near sharp objects. All we're looking for is undervalued growing companies with generating cash. Why? Well, Croakey comes from Goldman Sachs Wealth Management. Value growth income comes from Richard Thaler, Daniel Kahneman, Eugene Fama. If the names don't ring a bell, they've all won the Nobel Prize in economics in the last 25 years, and they should be more popular names than Dua Lipa and God knows who. I can't remember. Cliff Richard. Okay, they're not all going to be like this. If they were, I wish they were. You would say I've got a crystal ball. I wish I had. I don't. In hindsight, I should have put everything in this and nothing else. Maybe even today. Whilst we still own this, there was a period here. I had to exit it, and then wife and son got in first, me a bit later. That was the insurance policy against the falls, because I was worried it was going to do this, what it did here, but it didn't. Doesn't look like it's going to. So there was a bit of an insurance policy where, had I held on, I would have seen a big sharp fall, then a bit of a recovery. In the end, I ended up getting out there and buying back a little bit more expensive. So be it insurance policy against the house burning down, which was this. Didn't happen. That tends to happen about once every 7 years, roughly, with most companies. Most companies which are of sufficient quality, obviously, and the sufficient quality point being this. Notice how it goes from bottom left to top right. That's a pretty good indication of quality. Anyway, the point is, they're not all like this. Let's be absolutely clear. Some things are like PayPal, which we had to exit, okay, because it was turned out to be a stinker. So not everything goes up. Let's be absolutely clear, because this is the bit that people have so many bad assumptions because of what they've been taught by parents